Sandeep, a word on flows themselves, right? The SIP investor is staying strong, agreed. But the last 3 or 4 months now, on the lump sums, due to one reason or the other, we're seeing some pullbacks. Is that worrying? I mean, I believe there is no past history to kind of give us comfort here, but I'm just trying to get a sense from you. What's your sense? Is this a change from what's happened in the last 5 years, or is it just a small pause? What's your best guess?
So, Neeraj, you have to understand again. I will answer this question from a human side perspective. Okay, first of to understand on multiple forum, I will say the retail investor in this country has become more mature as compared to whatever we have seen in the past. Okay, and they have understood the importance of SIP. They have understood the importance of wealth creation journey through equity market, and that is very deep rooted in his mind right now. And I always say every bull run has a leadership role. This bull run is led by retail, and retail has a very large base. Now, coming back to your point, the lump sums flows have been slowed down. So you have to also look at a lot of people got very excited at the peak of the cycle. They got sucked in. It's a human way. At the peak of the cycle, majority people who are sitting on the fence, they also get sucked in. And when they get sucked in, and then they don't have patience for that much period because they are virtually coming at the peak of the cycle. So some of those investors are again realizing that they are able to recover their losses or the whatever level they have invested, or the NAVs have come back to the similar level. So some of the exit will happen, and this is what we also understand, because some of the people who came at the peak of this cycle will like to prune down their exposure or actually move out also, because they never participate from the bottom of the cycle. But when market again makes a again hit a new lifetime high or cross previous highs, okay, then the cycle will change completely. The people who have sold will be again forced to participate, okay, because it's a human psyche. When people say, okay, market is a new lifetime high and I am still sitting on cash and I withdraw money, they will again going to force to get participated. So I think it's a phase. If you ask me, this phenomena can last maybe 2-3 months also, because people are just realizing they are getting back their money. Some people will like to encash that opportunity. Some people who are stuck will like to move out. But as I advise to long-term investor, India is a very constructive long-term story. Buy on dip. So if you even as I advise to a lot of people who virtually come at the peak of the cycle, I always say even you have entered the peak of the cycle, doesn't matter. If you have 5 year horizon, see, equity market is 5-10 year horizon period. Asset equity as an asset class and equity investors should look from a longer term perspective. You do get answers, because after 5 years again you realize, because I have never seen any 5 year cycle. I mean, you have lost money even in the small cap also. In fact, you got the highest return in this space. So I remain very constructive with the background that something already has changed for India. India perception is very different what was there 10 years back or even 20 years back, forget 40 years back. In last 10 years also it has changed, and I think last 4-5 years also it has improved significantly. Today India is a force to reckon. Best of the global firm wants to participate in the India economic boom, particularly when it is led by demographic cycle, which is in your favor. So I think it's a constructive background. I always say don't miss out this opportunity
Oh,
if
surely.
you can't manage the short term pain.